Why the labor market matters for finance. The labor market is not just a statistic. It's the core of the entire economy, influencing corporate profits, inflation, consumer spending, stock market movements, Federal Reserve decisions, investment flows across industries. When the labor market is strong, consumers spend more. When it cools down, companies slow hiring, lower forecasts, and investors become more cautious. That's why anyone investing should understand. Changes in the labor market are an early indicator of future market movements. Key findings from the Indeed Hiring Lab report. The research reveals an important trend. The U.S. labor market is stabilizing, but not booming. This means the rate of new job postings is slowing after the explosive post-COVID period. Demand remains steady, but companies are becoming more cautious. Hiring rates are leveling out without dramatic spikes. Sectors like tech and healthcare continue to see talent shortages. However, logistics, retail, and mass-market jobs face gradual cooling. The key takeaway: the U.S. economy is not overheating, but it's not falling either. It's entering a phase of moderate, stable growth. For investors, this signals more predictability in the market. Which professions are most in demand? According to Indeed and other analytics centers, several sectors continue to grow. 1. Technology and AI machine learning specialists, artificial intelligence engineers, algorithm developers, data analysts. Demand remains high even amidst the slow hiring in IT. Companies understand that artificial intelligence is a competitive edge. 2. Cybersecurity. Every year, cyber attacks increase, and companies can't afford to cut back on security. This segment shows steady, consistent growth. 3. Healthcare and patient care. The aging U.S. population makes this sector long-term growing. Stock markets also account for this. Healthcare companies continue to strengthen. 4. Engineering professions. Energy, infrastructure, and manufacturing are undergoing modernization. 5. Professions related to communications and management. Even in a tech-driven world, soft skills are critically important. Project management, strategic thinking, leadership, and team competencies. These skills define a company's growth efficiency. Which professions are stagnating? Not all sectors are experiencing growth. Some are seeing a decline in demand. Office staff, secretaries, administrators, mass retail jobs, call center operators, low-skilled logistics work. Automation and AI are gradually replacing these roles. This doesn't mean these professions will disappear, but their stability and income potential will decrease. What this means for investors. Investing isn't just about picking stocks. It's about understanding the deep currents of the economy. 1. Companies as key indicators. If a company is actively hiring talent, invests in technologies, expands its workforce skills, this is a clear sign of long-term growth. 2. Geographic distribution of jobs affects real estate and local markets. Job growth in Texas, Florida, Arizona signals economic strengthening in these regions. This could mean rising housing prices, the emergence of new logistics hubs, strengthened local businesses. 3. Sectors leading in hiring. Leaders in stock market. Historically, this has always been the case. The tech sector, growing market capitalization, healthcare, stability. Manufacturing, cyclical recovery. 4. Stronger labor market, more spending, higher corporate profits. The higher the employment rate, the more Americans spend on goods and services. Skills of the future. Which abilities will boost salaries by 2026? In this part, we'll shift focus from investors to those who are building careers. But keep in mind, investors should also understand which competencies will shape the economy of the future. Diploma versus skills. The last decade has seen a revolution in the labor market. While a prestigious university degree was once the ticket to a career, today companies are saying otherwise. We hire for skills, not diplomas. Why is this happening? Technological change outpaces educational curricula. Companies need adaptable specialists. Practical skills offer immediate value to businesses. Job performance speaks louder than academic status. And while people used to invest in education for status, today they are investing in competencies that bring income. Top 5 skills that will increase salaries in 2026. 1. AI and machine learning skills. AI has become the foundation of productivity. The ability to automate processes, use models, build analytical pipelines, makes specialists indispensable. 2. Cybersecurity skills. The demand exceeds supply. Motion Recruitment notes that companies are ready to pay a premium for specialists protecting infrastructure. 3. Management skills and strategic thinking. Managing teams in the age of technology is becoming more complex. We need leaders who can work with data, AI, and people simultaneously. 4. Communication skills. Paradox: the more automation there is, the more valuable human interaction becomes. The ability to negotiate, present ideas, work in multicultural teams is becoming critically important. 5. Project management organizing processes is the key to a company's effectiveness. How to develop these skills. Online courses. Coursera, Udemy, MIT OpenCourseWare. Practice. Launch personal projects. Participate in hackathons. Mentorship. Learn from experienced specialists. Build a portfolio. GitHub, Kaggle, LinkedIn case studies. How these skills affect your career and salary. Professionals who possess AI, strategy, and cybersecurity skills already earn above-market salaries of 20–45% more in tech, 15–30% more in management, 25–50% more in cybersecurity. And this trend continues to rise. The U.S. labor market is stabilizing. But within that stability, massive changes are happening. Professions are shifting, skills are becoming key assets, companies are restructuring processes around AI. Investors should track these shifts. If you're an investor, analyze hiring trends as a leading indicator of future company value. If you're a professional, invest in skills, not status. And if you do both, you win twice. If you enjoyed this analysis and want more insights on labor market trends, technologies, and investments, be sure to like this video, leave a comment, subscribe to the channel to not miss our upcoming videos. Your feedback helps us create even more in-depth and useful content for you.